Pickleonia.
Good morning, everybody. How you guys doing? Only 45 hours left until the casino reopens. It's true. How has everyone's weekend been so far? Can you make the market open tomorrow? No, but you could always trade crypto or something. JFresh ruined my weekend. Okay. I believe that. He's probably very happy about it, too. What tier of donations gets us the free box of Costco-sized ice cream bars? There isn't one. You know what? I'll throw it into Pontiff. Did you see that post of DFE's brother with the Terminator game in the background? Yes. The preacher at church was talking about the devil rug pulling us this morning. Why is RC the devil now? Thinking of selling $1 Bobby CSPs on a downswing for a quick 50 to 30% in a week. So you want to buy a bunch of Bobby at $1? That's what that sounds like to me. Good morning, Bob Vance. Advanced Refrigeration, 4.48 stars on Yelp. Greek, I'm driving home right now. My friends are listening. Say something that makes me look good. Oh, Velvet Jupiter really likes people to send him feet pictures on the internet. Also, small penis. How was Boston last night? I didn't go. Were you there? I'm sorry I didn't meet you, Carl. I know you were excited to hang out. Perfect. Don't forget about Tiny Peeped. Wait, I hadn't. Also, welcome back, Plumber Poopy Hands. Does anybody actually have any questions about stocks today? Or are we just gonna sit here and talk about nonsense? When I mentioned opening puts on FSLR earlier this week, you said you thought it was too soon. Do you think SLD weighs on it? Am I big dumb? SLD could. I don't know what your time frame for those was. But for longer term puts, yeah, it could be a little too soon. That's a tricky short. Very profitable when it hits. The last time it dipped like $30, but tricky. You wanna really try to nail the top if you can, because it can move against you really hard. Um, mentioning puts or calls, up to you. Yeah, when are we getting rug pulled? Well, we don't have any liquidity yet, so I'm not super worried about getting rug pulled. Like Bobby. So I could care less about Bobby as much as you, but I think this thing is really going to pump next week. Thoughts? I think Bobby's dead. I don't think it's gonna pump at all. I think they resolved all of the liquidity on it, and it's got a big fat share offering. There might be some like T+2 action, but it probably won't be as fun. Also, don't forget the weeklies are off the chain now. So, yes, what is a stock? Oh, Jesus. I thought today we were going to watch you roast random SS posts. It's not worth my time. Can we talk about JFresh bearishness regarding XRT? Sure. XRT is not really very liquid. It's a little more liquid than it's been in the past preceding runs, but none of that liquidity has really changed over the last week. Um, I also don't think they're leaning as heavily on XRT right now as they are like what's it called? IKR and IJH. Can you explain what the charts that show liquidity mean? You posted in the Discord. In the announcements? Um well, basically we're looking for one of two things to happen on GameStop here. We're looking for either we're gonna see liquidity pullback and move more towards a more illiquid state, right? Another rejection of the breakout. Or we're going to continue to see it expand. We want to see expansion, right? And we want expansion to pick up some velocity here. If we look at 1 second, let me pull up IWM. So if you take a look at like Bobby, you know, this was kind of like the inception point for Bobby, and then significantly more volume begins to come in. As you can see, the rate of expansion picks up massively, right? This is what we want. This is that mean reversion to liquidity that we're looking for on Upstart and GME. Neither of them have realized this yet. As you can see, this is very similar. Bobby's liquidity levels are very similar to where they hit in August. This could theoretically continue after the down day, but remember, Gamma Max is still like in the $7 range here. So we're looking for that to occur here. We're looking for it to occur here. GME hasn't had a significant realization of liquidity since like October 31st, and it hasn't really been restored to very liquid levels since like early August, May and March obviously as well. And so that's what we're watching. I mean, obviously I'm trying to be very careful with this, right? Because there's a lot of new things we're looking at. There's a lot of unknowns. These deferrals, while we think we may have found the timing for the deferrals, and like when secondary market liquidity begins to be realized due to them, that doesn't translate directly into when price improvement occurs. And price improvement can occur after secondary market liquidity is realized, right? So over this last week, if you look at GME here, we see a significant shift in secondary market liquidity on IJH, and primary market liquidity on GME, which is driving price up, right? But a lot of these fluctuations can occur with like very little realized price improvement. Like if you look here, when the ETFs began selling off during the rebalance period, a lot of liquidity was realized, but very little price improvement, right? So we want to be careful. We want to play the shorter dated calls on the small upside moves and have plenty of theta for any actual breakout. Because if we go back and look historically, if you look at like the March period or the May period, May was kind of interesting because you had this big liquidity realization that resulted in some price improvement here, right? But not much over the next several trading days, right? And then it kind of pulled back, and then we got the reversion to mean on the Wednesday following May OPEX, and then with March you have this significant period of illiquidity, almost all the way back into like early February, so from like Feb 17. And then when this reverts, it kind of just reverts all at once, right? But if you look through the deferral period that preceded that, after November OPEX, which was here, we have several of these periods where small amounts of liquidity are realized, and this is used to short and stabilize price action. So we want to make sure it's not this, and we want to make sure it is this, right? March 150 on FSLR. Let me pull up my chart. So FSLR is like a little bit above risk. I haven't entered anything here. My last puts I sold off like somewhere over here. So it's been a little while since I've had any exposure. I would try to be a little patient with it. I think That's useless on this. Hold on. Here. Yeah, with it breaking all-time highs, I would wait. I would wait at least until, volume normalizes a little bit more. Um I don't think their next earnings are going to be very good. I think there's an expectation for that. Um how much further this is going to go? I mean, it could even tap like 200. So entering puts on this now seems a bit early. Um if you buy enough theta, I don't think it's a problem, but you could get those puts a lot cheaper if it continues to climb. Especially if you're going to target like the 180 or like 170 level. Stock question, when upstart 300 plus gap fill. You mentioned the JPM color at 4050 on SPX. I thought they moved it. Wasn't it like 4065 or something? So deferral period ends on the 18th. How does that play into everything expiring on the 20th? So deferments are they're tricky, right? Even though the date is deferred, the settlement is not, right? So if you have T+2 or T+5, depending on whether it's or ETF related, this should also be deferred as part of the deferment process. So the settlement date is moved, and so I think there's some flexibility with that. But we're still watching the 12th through 18th for more volume. So ideally, what we'd want to see over the next couple days is a surge in volume, and hopefully that persists. That price improvement persists long enough into OPEX for it to create, gamma exposure and some risk on the market maker side. What are your thoughts on SPX following the SLD period? Generally it rebounds. It's going to be leading into the next rate decision from the Fed. I think the market's pretty bullish on like a 0.25 increase, which is probably, that's about like 2 weeks out or a week out, right? I think PPI data is going to factor pretty heavily into the price action this week. Do we have any significant jobs data coming up? I don't think we have anything just yet, but we might have like shorter term reports. Let's see, we got PPI on Wednesday, 3 and 6 month auctions. We have some Fed speeches throughout this week. Inventories, housing data into the end of the week. So yeah, I mean, the crux of this week's gonna probably be PPI. I don't know if PPI is gonna be like bullish enough to stop any effect we see from SLD, obviously, but I'd expect SLD to have some effect this week. Generally speaking, after the SLD period, as people reposition, we see increased volatility in the market. It's usually positive. Usually the settlement period for SLD deposits has a positive effect on the underlying. What are thoughts on this? They shorted Bobby into oblivion. It doesn't look that way. Even if I get stuck with Bobby at $1, it shouldn't be overly difficult to offload. People said that at $8 too. I do. If Jimmy pops to say 35, 180 DTE in the money puts, it'd still be profitable even with the IV crush. In the money being 35 strike on the puts. No, the IV is going to be very high at the money, which is what you're referring to. 35, when it runs to 35, is at the money, not in the money. You would need like 0.6 or 0.7 delta at least. You ideally you'd buy 0.99, right? And you would want these to be very far dated in order to dodge as much extrinsic value as you feasibly can that was generated during the run. The point of this is because if you buy an at the money, like a 0.5 put, 0.5 delta put, um, you're gonna be paying a significant amount of additional premium on this that you're gonna lose as implied volatility falls off. So as IV crushes, the value that you put into this premium is going to decline. And, it'll be offset by the declining price, but not sufficiently, right? The first round of bank earnings hasn't been very interesting. I mean, they're showing like less profits on their interest income, which is odd given the increased interest rates. But also, there's less loans being taken out right now, so the credit markets are still stagnating a bit. I don't think the rest of the banks are going to do too poorly. I think the banks are in a fairly safe spot, but it may be a little worse than expectations. Saw a super bullish Elliott wave post on Reddit that looks hopeful, but only time will tell. Elliott waves are horseshit. Um, Elliott waves are like the idea that like fractal patterns in the market reoccur, and they're basically nonsense. Yes, stocks go up and down in cycles. No, Elliott waves don't track them very accurately. Can you talk about the risk-free rate? Hold on. Can you talk about risk-free rate being mispriced by the SPX? I'm wondering if now is the ideal time to start looking at 90 DT SPX puts, or is the Black Swan event the soft landing? That's a good question. If we hit a soft landing, I don't think that's going to mean there's no more pullbacks in the SPX. A soft landing, I think, would be very much very much stability in this range, right? So finding stabilization, which I think we have to some degree, right? If you look at the lower bounds, we are stabilizing, and then an additional fall off may not fall off to the previous level, right? We may see a pullback just to like 3,500, right? And then we could stabilize in that range as margins decline and earnings get worse. I do think we've at least seen a bottom without any political news or anything like that. We've at least found some stability in the SPX to the downside. A break up here would into this range, like above 4,100, would obviously be pretty bullish and confirm that stability. You mentioned the JPM color at 4050 on SPX. What about it? They can move it if the market's rising. They likely will. They've done it in the past. Do you think we'll continue to see upward pressure with the deferred covering, maybe tempered by SLD into the end of next week? Positioning for OPEX early next week? Right now, I have a fair amount of OPEX exposure. I have some February calls. I have a few March calls. I have some Jan 2024 calls, both on Upstart and GME. My shorter dated like bi-weekly calls took profits on or losses on Friday, depending on the strike. I'll probably re-enter some smaller short dated positions as I see realization of volume, and then continue to add to average down or ideally on SLD, add more significantly to the farther dated positions. So I'm just trying to be very careful with it and not over leverage shorter dated positions that are going to get burned up if nothing happens. I'm doing all of that, Bruce Wayne. You're asking me to give an update on the things I'm already describing while I'm describing them. What's the best way to short the market with 20K as not to put all the eggs in one proverbial basket? ETFs are a little safer than ETNs. You don't want to use VIX because it's volatile and it may not be a safe way to short the market unless you're very close to the money. Or in the money. You can use in the money VIX calls to hedge downside. SPX is great. The contracts are very expensive though. There's SPXW, or not, sorry, SPXS. There's which probably is okay. There's you could go like short QQQ, like SQQQ. There's a short IWM one. I'd probably be careful shorting IWM and Dow going forward, but QQQ and SPX are fine. I mean, there's a million instruments. You just have to choose the one you like best. I prefer SPX, but SPY's also an option. About 90 DTE cat puts 10% out of the money. Do you think it has more room to the upside? Probably, yeah. You should never short cat. It's a stupid idea. It's just super risky. It's volatile on its drops. It'll tend to keep your puts out of the money longer than just going short the Dow. And I don't know if going short Dow right now is a particularly great idea versus the other indices. What do you think the bottom of GME would be given a recession? I mean, theoretically, GME should perform well during a recession. So while there may be some initial negative sentiment, we might drop into the like that 15 to $10 range again, or 16 to $10 range again. I would expect GME to perform well in that environment. I would expect their revenues to be mostly unaffected. They have cash on hand. I wouldn't expect them to be accruing any debt. If they did opt to go for a growth cycle, that'd be a great opportunity to do it, right? Do you have Greeks yet for Tuesday? Do you think GME or Upstart will have GM move up enough that new options open could 3 to 5x? Yeah, it's we don't have Greeks. We have end of day Greeks for GME and Upstart. Um the accuracy of this can change depending on how much exercising occurs. They're not my favorite data point, and I'd much prefer if we updated the Greeks Monday morning instead of Friday night. But right now it's not automated. Let's see. Gamma Max on GME is still at like 25. Upstart. Is that updated? Yeah, it's the 13th. Upstart, we're looking at Gamma Max at 2033. So slightly up. Also, don't forget that the expirations can have a big effect on Gamma Max and where it ends up. As you know, puts are closed and calls are closed on the Friday's expiration, that can have a big effect. Although I think most of the OI open right now is for the 20th. There will be some effect from the 13th expiration. Has chat become too conservative from the constant downs that we're overly timid about the idea of big VWAPs? Yeah, but that's a natural, psychological effect of being in a bear market, right? So yeah, people are less bullish. They're definitely more cautious, but I don't think that's a bad thing. I think people being cautious is one of the better things to come out of all of this. Especially right now. Thoughts on APRN? It looks like it might be due for a small squart. Take a look at it. I don't really like APRN. It's picking up some volume, but it doesn't seem to be overly positive. It had like a little spike and then immediately dropped back down 30 cents. I'm not particularly fond of this, if I'm gonna be completely honest. Um, yeah. Would it be a rug pull at 20? It's more like a washcloth at these prices. Would what be a rug pull? Poopy pants at $20. Jimmy held 20. Upstart, held 17, and I think it even climbed in after hours, right? Um, Fucking TradingView doesn't display that, but I think it did. Let me look. Yeah, Upstart went up like 7 cents in after hours. So did the runs start yet? We may be seeing the beginnings of it, but I don't think we've started to see the realization of volume yet. Looks like a lot of puts on SPY around 30.90 for Friday's expiration. How likely are we to see end of week at like 30.91? Okay, so I don't really watch SPY, but I do have support levels. Um, so the best you can do with SLD is presume like a 300 BPS pullback, right? This is the average is somewhere between 2 and 300. So, at 300 you're looking at like 386. 200 BPS, you're looking at like 390. However, this doesn't account for if we continue to move up. Oop, that's way too thick. If we continue to move up into, into Tuesday, and we find a higher peak around the 4020 level on SPX, which I think is possible. That's gonna put us more in the range of like 394 to 3090, right? So that kind of makes the 3090 a little riskier. So I'd be cautious going that far out of the money, regardless of the OI, because the OI is not telling you whether they're long or short. And for all you know, those are short puts, right? They could just be sold, and nobody thinks they're going in the money. When USA reaches the debt ceiling, does that do anything to the markets? Has it in the past? I mean, sometimes they drum up like a lot of news about it. I mean, we never actually we never have one that resolves amicably. So, yeah, they use it to drum up like a lot of negative sentiment in the markets. I think the market's reaction to us constantly hitting the debt ceiling over the years has been less and less as we realize this is a thing that's never going to be resolved until the last minute. And then the resolution of it tends to be fairly bullish. At least in the last, 7 or 8 that I've paid attention to. I wasn't here for Friday. The whole market was pulling up. Why did Jimmy and Upstart go down? They actually realized like a little bit of liquidity into the end of the day on both GME and Upstart. Was and we see them just kind of short both. Jimmy didn't get shorted as hard as Upstart did. If we go out here to the 15-minute, GME ended up actually being a little more stable over the day, but it's also more liquid than Upstart is, right? So Upstart's up and downside are a little more violent. GME not as much. Do you need to short more on GME to get the price down? But Upstart stabilized and recovered in like the $17 range. It didn't drop like 50% or anything like that. All right. Is the new U.S. debt hitting its ceiling has any impact on the market? Okay, I just discussed that. It's difficult to time puts for now. It is. Puts probably. I mean, I'm gonna adjust expectations for puts and calls and the update, but so far we've stayed in the ranges that I've proposed. Things have remained bullish. I'm gonna move up my put strikes into the end of this week, and I'll probably move up my range, at least my upper bound for Feb 17 puts. I don't think I'm going to change the lower bound. Maybe a little bit. We'll see. I need to do some more options chain analysis and stuff on SPX. But right now, I would say that my upside target for SPX is going to shift higher to around like the 40-50, 40-65 range in the short term, especially with PPI potentially being bullish. And then my downside put range is going to stay fairly near the money for shorter dated puts. For farther dated puts, you still have some flexibility, but I would say be a little more cautious with buying too far out of the money. Like sub 3600, I would not expect them to go in the money in the time frame that we're looking at here. It's almost too much of a drop in too short a period of time. Not that it can't happen, obviously, anything, especially with all the political instability right now, anything could happen tomorrow. But for a planned position, I'd probably want to be in the higher range. Far dated, you probably don't want to go too much below 37 or 3600, which I think is like right here. If you're gonna buy like further out, like June or July, into that quarter, like post quarter 2 period, then there's a little bit more flexibility with the downside. So what else has I followed? GME, uppies, etc. Remind me what the magic green, red, yellow lines loosely mean in a way that doesn't reveal your secrets. Basically we're looking at liquidity on GME as it is used in its primary and secondary markets. It's like a basic way of explaining it. Although technically the indicator we're looking at is not liquidity at all. it does represent uh, the amount of free liquidity in those markets. DMI on the daily looks like it's about to squirt like March. Yeah, the technical indicators look phenomenal. And you know, so do our analytics, right? Any advice on how I can convince my wife to buy 1,000 Ks of Upstart with her own money and potential take profit target? Thanks. Upstart is moving into a range where it's a little expensive for a long-term buy and hold. Remember, credit markets are not stabilized yet. There could be some time till a better valuation is realized on the company that really scares shorts out. And while shorts could get scared out on a kind of violent upside run, the long shorts, may be able to hold and stabilize and carry their positions into Upstart's quarter one and quarter four and quarter one earnings. Um, Hopefully Upstart's expanding the range of products that they cover, and we start to see more loan volume passing through them and their profits pick up again. But that may not happen until the credit market stabilizes and the Fed stops pumping rates, right? So, if you're talking to someone about it, you gotta lay out the downside of that. Upstart is very cheap in its sector. It's probably we're trading at like a 2x multiple of book, and if you look at Experian or um, TransUnion, they're trading at many multiples of book with significantly worse financials than Upstart has. They still have a share buyback on the table, so um, that's slightly beneficial to shareholders, especially during this period of very little growth or expansion. um I would say a 1 to 2 year price target for Upstart would be between $30 to $60. When credit markets do stabilize, they'll be able to shed off a lot of that loan balance that they're carrying because they can't find someone to pick it up, which will improve their balance sheet significantly. I mean, you're going to see a drop in liabilities, which is going to improve their book value. Their free cash flow will pick up with more business and volume as well. Their profits are around 50 to 55 cents per dollar in sales, which is a phenomenal conversion rate from sales to revenue. So um yeah, it's just kind of a waiting game, and obviously there is some risk there with the credit markets not stabilizing in the near future. um but right now I think, I mean, under like 15, 16, it's a very good buy. If you can get it under 12, that's amazing. My cost basis is about 18, 1830, 18. Well, I might be closer to 18 now. I've been grinding it down, but I'm not happy with that cost basis. It's fine long term, but I'd rather it be lower. I'd rather have a cost basis, in the like $12 to $15 range. So ketchup is the main condiment to watch. No, no, that's not how that works. Any advice on how I can convince my wife to buy 1,000 shares of Upstart? Okay, John D, dude, welcome to Pigeon Whale. Thank you so much, man. Hit me up on the Discord and I'll get you added to the Royal Pigeon Whale Society for the advancement of cooing and other lofty goals, where you can rain down feces upon the poor and at everybody in chat. Conrad Hackers, welcome to Cornishon, man. I don't know how to pronounce your last name. I assume it's Eastern European. Um, when is FOMC? I think it's 2 weeks out. After OPEX week, or yeah, like at the end of the month, somewhere around the end of the month. Hey Greg, can you please do an analysis on NVIDIA in the next few months time frame? I know the initial target is by March below 100, but seeing this current rally, it's never ending. It really hit my confidence as buying more puts, as my current ones are already down 40%. Okay, I assume you've not been following the NVIDIA play. If you're down 40%, I exited all of my NVIDIA short positions before this rally. I will re-enter them. I'll probably post an update on it. But wait for a peak before buying more. The time frame is extended because the market is continuing to stay up. You're gonna have to manage that. So we're looking for Jamie to peak on. I'll go over NVIDIA in a second though. So we're looking for Jamie to peak on the 18th or OPEX. Yeah. Well, 16th, 18th, or OPEX. Mocha Chobi, welcome to Dillionaire. Thank you so much. Hit me up on the Discord. I'll get you added after the stream to the country club. We've talked about illiquidity in the treasury market. How and when might that get resolved? Does that mean treasuries could be printed for QE purposes at the bottom of a crash? Yes, they can. Treasury market illiquidity can be solved with quantitative easing. So it's something to consider in that, even though it is illiquid and it could potentiate a crash, it can be resolved, except maybe not rapidly enough to stop to stop a serious drop in equities and bonds. I think the Fed's aware of it. I don't think there's any. I think everyone's fairly aware of the illiquidity in the treasury market. I think their plan is hopefully to start easing easing interest rates and dropping yields, and hopefully improving the value of those farther dated longer dated contracts, the vintage contracts, which are becoming so illiquid due to the current high yield rates. Will that lead to VIX being a goodbye soon then? I mean, yes. Careful with VIX. VIX isn't like a play. I see a lot of people that always want to play VIX. It's a shitty play. If you want to short or go long the market, go short or go long the market. If you want to hedge something, consider using VIX. Like, everyone's always trying to like play the upside on VIX, like its movement up is an inevitability, and it's not. Are we gonna gamble on the European market tomorrow? No. Can you talk more about exiting an SPX straddle? I enter 5 to 8 DT, watch for supports, resistances, and gamma updates you provide, but only managed to make a few $100s gain. You can manage the position more. Generally speaking, if you're cutting a losing leg and a winning leg simultaneously, you're only going to make a few $100s, right? So here, let me try to pull this up and kind of, well, hold on. Let me do NVIDIA first, and then we'll go back to that. All right, so NVIDIA's been rallying since about the 6th of January. My put positions on it were cut. I still have a long-term low-end target between $100 and $80. Mostly this is going to be affected by earnings in Q4 and Q1, or at least this thesis is for that. specific purpose. Nvidia is approaching its upper like kind of potential rejection range. I think with the current bullishness on the call side, 175 is not out of the question. You can choose to play the upside on that to offset some of the losses from your puts. But when you're entering a position where you expect the stock to go down significantly and you're extremely far out of the money, right? Say, you're entering here at, 180 and you're targeting 100. This is not, I don't know what the fuck this is, but this is not like a stable options position. You don't just buy super far out of the fucking money options and wait, right? Like, these are going to lose value to theta. um and the chances of this dropping below 100 in 3 months, especially with the market rallying, are very slim, right? So you need to manage this position. It's not something you can just sit on and expect it to happen. If this position goes up 30-40%, and you start to see, a stabilization in price action or a turnaround, you want to take profits. You want to, either move this further out, or you want to move this up into a higher range where you can more easily capture profits, right? You can't just sit on these and wait for something to happen. You have to constantly be managing, constantly moving them around. If you're targeting that far out of the money, you should also have puts closer to the money, right? I think a lot of people do this, and it's really important to understand that you can't just buy like a super far out of the money position and pray. If you're buying super far out of the money positions with theta like that, you need to capture any profits realized on them. Ideally, you want your puts to be in a range that the price is going to fall through and put them in the money quickly. Theta is your enemy, and in the money contracts, the faster your contract gets in the money, the faster you slow the rate of your theta decay. So, even when I positioned here, I was positioning at 170, I was positioning at 160, I was positioning at 150, and then I was also positioning, at like 130, 110, 100, right? And then when it started to stabilize, I cut the 100s, the 110s, and the 120s and the 130s, right? I hold on to the in the money puts, and as it begins to turn around, I cut those too. And then, as it rises, I will re-enter that position. But something as index exposed as Nvidia, you have to follow the movements of the market with your positioning. Right now, I think it's possible it goes up to 175. It may even go a little higher if the market continues to rally into the end of the month. I expect the next big reversion to come with earnings. If we're going to pull back hard, it's going to happen with Q4 earnings or unexpected Fed decision, both of which occur at the end of this month. So right now, entering new positions, be patient. If you want to try to target the upside a little bit to offset losses, that's an option. Otherwise, wait until we realize kind of a peak, and then, consider averaging down and maybe getting strikes that aren't 100% out of the money. Also, pay attention to everything day to day when you have a position like that in place. There's a reason a lot of people choose to throw their money, even the financially literate and informed investors will put their money in things like bonds and ETFs and mutual funds, and that's because they don't want to do the work necessary to make more. So if you want to do the work necessary to make more, you need to put in the work and the effort. I'm not bashing you, but it is an important lesson for everyone here to learn, and so I'm kind of harping on it a bit. What do you think about the possibility of a wave of loan defaults occurring? It could happen, especially in more subprime accessible markets like auto or student loan. Banks are starting to struggle for liquidity. The more it happens, the more they need to borrow in order to lend. Yeah, rates are going up, but so is their cost to borrow and frequency. I mean, I would actually say that banks are extremely liquid. They just don't have any incentive to put their liquidity anywhere except like on RRP and pump it into, short dated treasury yields. So they don't, and that's part of quantitative tightening, is to push the banks out of the markets with their liquidity, right? But they're sitting on a lot of cash. It's one of the reasons they keep passing the Fed stability tests. As housing crashes, or REITs a horrible idea or a good buy? I mean, it depends on how low housing drops, but they'll become a better buy. I wouldn't pick them up right now with the market still. It's dropping. It's dropping rapidly, but it's still got a lot more room to go, I think. Like famously was one of my larger positions for a long time. And I sold out. I have not bought back in. I'll be waiting for the housing market to continue to drop. I think we'll see a significant decline in real estate pricing, and then you want to look at REITs that are um, ready to take advantage of distressed properties and stuff like that, and have a lot of cash on hand. Some REITs don't have a lot of flexibility with their assets, and they're kind of locked in. That's not the kind of REIT you want to look into. Can you take a look at BE Semiconductor Industries Nevada? It's Euro Next stock. Looks like I'm looking at some calls on it. BE? Uh, Euronext Exchange. I like the recovery. There's a lot of resistance in this range. Um, a little, maybe a little too much exuberance. Probably going to see a continued decline in like EPS and revenue, especially as we move forward. Their margins are a little bit, still a little bit high. Trading like a 20x multiple. This, you could, if you want to go long on it, you could probably find a better entry. I don't know how much this is going to continue. It's really risky here, entering like right as it approaches this resistance. I guess if you could confirm a breakout, maybe above like the $68 level, um, or at least that would be like your near target, and then keep your risk really tight. Like, fuck, that's a lot of range. Keep your risk tight around like 60, 63. You don't want that downside gap to fill, because if it does, it could cascade, and then you might end up at like 54. So I would keep the risk really tight if I entered something like this, and the initial price target, uh no higher than like 68. And then obviously you can manage the position from there, set up stops, and ensure that you capture your profits if it does continue to move up. So Elliott waves don't work, so no $779 price target. I don't fucking have one. That's ridiculous. Also, they'd be so skewed if you're going back that far, and trying to factor in like January's price action. What are your thoughts for how the last few days and this coming week will affect OPEX? I don't think the next few days is really going to affect OPEX a lot. PPI is very likely to just continue as analysts expect. I don't see it like beating or falling under expectations by any significant amount. So SLD doesn't affect OPEX necessarily, right? It can drive some of the calls out of the money as equities sell off in order to meet those margin deposit requirements, but That doesn't like affect the expiration necessarily. It can change the amount of gamma exposure from the expiration. In regards to the JPM color, haven't we typically seen 5% above the top part in the past? Yeah, we can move above it. If we sustain prices above it, they'll roll it. They still have quite some time till expiration. So the fact that we're moving up into the upper part of the collar now, I think increases the likelihood that we'll see them roll it. 18 months, cool. Thanks for all the DD. Let's make this OPEX profitable. No Fregs Day. Thanks so much, Elliot. Are we traders yet? I appreciate it, man. Don't forget to drink water, you cocks. I probably should drink some water, actually. I don't have any water. I have coffee. That's good enough. I asked this question before you started talking about it. Oh, okay. Do you think Target fills its upside gap from November on this breakout? Thanks. Let's see. It could. Upside gap from November. I assume you mean from here in May? Probably not. I definitely wouldn't fucking target that range. It's way too far out of the money. The recovery looks nice. There's still issues yet to be felt by them, but maybe like I probably wouldn't target higher than 170. This has got a lot of resistance. It's failed to break that. It's failed to break up into that level, multiple times already. Most of these in line with like OPEX periods. Target's a retail stock. It's also got a pretty active options chain. So yeah, I mean I would play it a little tighter than that gap. That gap's obviously ridiculous. Good value, decent company, probably a very cheap price for it. Picking up shares at like the 130 level, phenomenal. But and they should do well in a recession. Consumer staples tend to do well. So, I don't know if they're going to be priced as if we're entering a recession yet. The technicals are okay. Maybe something, yeah, maybe something more at like the 185 level or something like that. I would expect this to reject at some point. You got a lot of fucking, you got a lot of bag holders, in these levels that are definitely going to take profits before this moves up anywhere near that range into like the $200 range. What did you, what does BTU look like on your catch-up indicator? I'm just curious. It's kind of uninteresting. BTU doesn't have a lot of, or doesn't have a ton of like secondary market liquidity. So, and it's fairly liquid. It's got you know, 142 million share float. So, and this isn't accurate at all. This isn't set up for this. You sound a bit more reserved and cautious. We were discussing this upcoming potential defer packs as opposed to this last Sunday stream. Is this because the data you guys are looking at has changed a bit? Well, we've started to realize liquidity again, right? And we're reaching levels where rejection is possible. And so and we didn't cross through them with a lot of velocity. And so it does give pause. I haven't changed the way that I'm positioning for it. I still think the positioning I'm entering is correct. I'm not selling covered calls yet. I'm taking profits on short dated options, leveraging longer dated options. If there is no realization, I'm prepared for that, right? Because, and I've said this a bunch, this is kind of new, and we still don't know how accurate it's going to be. It's not something we've been tracking for a year. It's just something that I kind of came up with in the last like 3 weeks. But yeah, BT is a bit too liquid for this, and these aren't. This chart is inaccurate. Thoughts on upcoming and on oil coming up on another run? ZOM, CVX, Oxy. Those are probably all decent. I mean I like Oxy. I still have a pretty big Oxy position, so I'm probably just gonna stick with that. I don't really have that much interest in oil outside of that. Are you still looking at first or second quarter market downturn, or say 20-30% drop in SPY SPX? Yes, I am. I still think earnings are gonna uh have a significant effect on the market over the coming like 3 to 4 months. First quarter four, then there could be some stability, and then quarter one earnings, I expect those trailing 12-month results to be negative enough that forward guidance is going to have to be pulled back on many of the stocks that are still trading at highly exorbitant PE ratios. And I think we'll continue to see a collapse in margin, which we've already been seeing through quarter two and quarter three. Curious your thoughts on NSA as a storage locker REIT has a decent dividend. The industry would do well as homes foreclose. PT for entry would be 35.25 to take a starter position. Let me take a look. Hmm. I'd be a little more comfortable in like the closer to $30. Just a cursory glance here. I'd have to dig into the fund a little bit more, but yeah, I think this still has some room to the downside, and the demand on the storage market may still be kind of far out. Debt ceiling battle coming this Thursday could cause a lot of uncertainty this week. No one ever gives a shit about the debt ceiling. Everyone talks about it a lot, and the media pumps it, and then it doesn't really ever have any effect because everyone expects them not. The expectation is already for them not to resolve it in a timely fashion. This happened last year too, and everyone was freaking out about it, and nothing ever came of it. Doesn't SLD start on PPI news? That can negate the SLD effects. It could, yeah, depending. I don't think PPI is that important, and I don't think it's gonna exceed expectations by a sufficient amount to offset all of SLD. But it could offset some of it. You know, SLD again is always best played like at the money. You do not want to take a lot of risk with it. There have been multiple SLDs where there's only ever been like an overnight drop, and then it recovers the next day and continues up into the following week. And so you don't want to try to like play far out of the money SLD puts. You think Carvana will have more significant short capitulation in the next coming weeks? Let's see how it's looking. It's possible, yeah. I don't know if liquidity has been fully realized. I still think there's a chance for it to move up a little higher. It is pretty well moderately liquid. Um, volume is still high, and it stayed fairly stable on Friday, only losing. Actually, it lost quite a bit on Friday, huh? 12% down from the peak. I mean, I think if Carvana falls below $6 again, I probably wouldn't want to touch it. The risk is kind of wide there. I'd have to do more analysis on it than I've done in a while. Uh, maybe DM me and ask me later, and I'll take a little bit deeper look at it. It's not my favorite of like these basket stocks to chase right now. The shorts are very confident there. What's a McBilly? I have no idea, Garav. Uh, thank you. Probably release a ton of liquidity after raising it. It could, yeah. We could see Dixie drop. Are you gonna release Pickles picks tonight or Monday night? Monday night. Sorry to ask again. I'm not sure if I understood. T plus counting post correct. Is T plus 2 plus 35C or T plus 9 plus 35C for FTDs? It's both. Depending on the FTD source, whether it's ETF or MM. Market maker FTDs T plus 2 plus 35C. ETF FTDs are T plus 6 plus 35C plus 3. Girk, I like you. Don't be mean to me. I'm not trying to be mean to you. What would be the best ETFs to short the entire market without the ability to buy shares? Like SQQQ, SPXX, SPXX. Yeah. Um, Upstart CSPs, Feb 15P, or 12.67% return ROI, quite lucrative. Thank you for putting it on our radar. Yeah, the yields on short dated Upstart puts are still really good. Which is another reason I remain bullish, is that we really haven't seen, that delta skew normalize yet. Same with Fubo, actually. And Jimmy. No, some big puts rolled off Fuberto last week. A lot of the $2 puts were closing. You mentioned last week, if we do see a run up once out of the money calls go in the money at expiration, is it feasible to sell deep in the money calls at market open on Monday to cover the dollar debit margin call created from calls exercising? Out of the money calls go in the money at expiration. Is it feasible to sell deep in the money calls at market open on Monday? No, it shouldn't be. Did I miss a discussion regarding SLD and liquidity reversion interaction for Jimmy? No, not yet. XS GTX, thank you so much for becoming a Cornishon. I appreciate it, man. Someone said the reason we ran on last Tuesday, Wednesday, Thursday is due to obligations to cover missing OPEX last November and December. Do you agree with this? What's your thoughts on this? What? Have you paid attention to anything I've done over the last 3 weeks? Just go read the announcements page, Nicholas. Could you give an example of how to find a REIT with cash on AH, DNA, and flexibility? You can, there's like some databases that you can look REITs up in. It's not something I do often. I can't remember the name of the website I used last time. I'm not a big buyer of REITs. Uh, I mostly just buy O. They're pretty well managed. Target stores are empty of merchandise. Theft rate is very high. Really, Target's considered to have some of the best security in like the entire retail sector. Their loss prevention is like the industry standard. So much so that they sell their like loss prevention protocols to other retailers. So that sounds off. I mean, maybe in jurisdictions where, you know, there's less legal enforcement of shoplifting, but they just simply wouldn't stock those stores, right? Any thoughts on Arch coal mining? They do a ton of metallurgic coal mining. I work in the industry and see a really good 5 years coming. I don't. Price improvement's been good. Margins are kind of dropping. Free cash flow is very strong. Not too much debt. It might not be bad. I'm pretty bullish on coal. So I like BTU better. I think it has less realized value, but this seems pretty strong too. A little less history, but it might not be bad. What's the float size? Ooh, very small float. That's nice. I'm catching you on 2x. You mentioned end of day Greeks earlier versus Monday morning. Are you deriving those using the options end of day summary data shop product? No. We have CBOE data. We're just not updating it as frequently as we could. You can use the end of day summary. Ghosting Buffett's plays. Who? Are you saying the options chain needs to be stacked if deferrals are going to do anything? It helps. But the options chain can also just become stacked in response to the deferrals doing something, right? Lots of FUD regarding the crypto environment. You think it's setting up for the next leg down? I don't think it's going to do well this year. I understand it's rallying right now, but I don't like it. Serious question, is average price a return to mean of a stock only for VWAP, or are there simpler average price mean of a stock? It's not only for VWAP. I mean, there's other averages that you can target. Faster and slower ones, and it depends on time frames. Did you already explain why buying BBBY weekly calls looks like the best play you've ever seen this week? I haven't. I sold some on Friday morning. Those did okay. Free money. I figured everyone would bail on their zero DTEs and it would drop, and it's already pretty fucking liquid. The borrow rate's gonna probably come back down. Which one specifically for quarter 4 do you expect to initiate more downside for SPX? Tech, mega cap, and advertiser based revenue. I think that'll then quarter 4 we're gonna see more capex reduction and we'll see losses in the services industries. I worked for 10 years at Target. I can confirm their theft prevention aspect. Hey Greg, I may have missed it, but do you think market shorts are waiting for a price point or a catalyst to move back into positions? Um, they're probably a little bit of both. I mean, right now the VIX is dropping. They probably would like it to drop much more, ideally, before leveraging the downside. I'm sure we'll start to see more positioning build up as we approach the next federal Fed rate decision. Do you think upstairs still has a good opportunity to run tomorrow? Or is it all downs now? We'll see how much. I mean, first of all, market's closed tomorrow, but Tuesday we'll see how much liquidity is created in the pre-market. I think Upstart stayed mostly stable, so I know it had that big pullback intraday, but it also kind of ran a little hard. So I think they covered, they picked up some ability to short, and they brought it back into a range that they could better control. Remember, don't forget those 1750 synthetic shorts that they really don't want going out of the money, right? Um, but yeah, I think price action still stabilized above 17 after close, so I think we're still in a good range, and I don't think their ability to short was that significant. Upstart, do you like synth longs? Yeah, I have a bunch of them at like $15. Do you have any interest in the 3D printing space? Not a ton. What was the case for the run this week versus OPEX week? It would increasing prices triggering a risk off on the any currently outstanding obligations, or they don't have extended settlement. That would be it. Otherwise, I'm still mostly targeting OPEX. Like I'm targeting shorter term price improvement through this 12th through 18th period, but my larger positioning is being bought with OPEX in mind. Because if you look at March, very specifically, if you look at March, which was the last long sustained deferral period into a large run, some liquidity was realized here during this late Jan to early Feb period, right? And then at the point where liquidity hit its lows, uh, that persisted beyond the we started to see a reversion in liquidity at the deferral date, right? But price action wasn't realized until after OPEX. And the same is actually true for Jan 2021. So, we start to see the secondary market and primary market liquidity improvements, which is that contraction, right? And that reaches ahead. But the expansion part, we want to see this continuing to move, and obviously to realize price improvement. But in March, the price improvement wasn't realized until after the OPEX expiration, even though the final day of deferral was out here on the 14th. So yeah, it's something we're watching. We have some realization of liquidity, but not a significant amount, and we don't have a normalization of it at all. So we're fairly rapidly approaching that break point where we're gonna find out if this is gonna contract a little longer and we're gonna drag out for a few more days, or if it's just gonna continue to expand and we start to see a significant amount of volume. And mustard hasn't done shit. Yeah, mustard's just flat. There's a better mustard. I'll show you in a minute when I get you guys on here. All right, so we're gonna have a quick conversation with Dork, and if JFresh is around, I'm gonna pull them up. I'm already running late to speak with them, so yeah. Let me hop in there and then find my headphones. Can you test that sound, Dork? Nope. Hey, can you test the sound real quick? No, we're not. We're not talking. All right. I'll wait till they get on. Any possibility of deferrals due to a government shutdown? I have no idea, man. Do you see this month as a repeat of 2021? Jan? Similar setup, but not the same price action. Oh. What the fuck? Sorry. Due to work being pretty busy, I'm trying to look for some big long-term puts on SPX that don't need to manage a lot and can pretty much guarantee print big on them. Probably could few what? Hold on. I have no audio coming out of the Discord. Could few X targets for earnings in Q4 or Q1 suggestions? I mean, if you don't want to manage them, you need to buy a shitload of theta. You probably want at least 90, maybe like 120 or 150 DT. You're going to also probably want to target nearer the money prices. The 4,000 level is a great level for puts. Obviously, our chances of pulling back below that are phenomenal. 3,900 is not so bad if you're buying a lot of time. 38, 37 might need to be a little more actively managed in the near term. 36, 35 would have to be much more actively managed even with theta. I'm sorry, FTDs spicy for Tuesday. Yeah, I'm excited about the ETF FTDs coming in again. Tesla dead? I know it pulled back again. No, I don't think so. I re-entered the call position on Friday for that the reverse diagonal spread. So I think it'll maybe push up through 125 this coming week. Oh, weird. Okay, so huh. Is that yeah, I can't seem to connect the audio to the my audio to the Discord. I don't know, it just says like RTC connecting. It's like not going it's not going through. Maybe there's Discord server issues today or something. Let me try closing it and reopening it. Yeah, that's what I'm doing. Okay, that should be working now. Can you guys hear me?
What's up?
Hey.
Yeah, I can hear you.
Okay, cool. Awesome. I hate Discord sometimes.
I know, right? The people on it is just, the worst. How's it going?
It's going all right. Let me make sure I have your guys' audio. Good spot. Can you say something again, Dork?
Sure, I can count to 10.
Okay.
1, 2,
Yeah, you're
3,
good.
4, 5, 6, 7, 8, 9, 10.
Jay Fresh?
Hey, what's up?
Okay, cool. You guys are good. Let's go. What are we going to talk about?
Well, first, I would just like to say that I was the one that asked that ridiculous question on BBBY that you actually answered a little while ago.
I saw.
Being
I knew the
sarcastic.
source.
Selling calls was the play.
I wish I sold more. I only sold like 20.
It kind of still is. There's still a lot of meat on that bone. I will say, looking at the prime borrow rate, there was a huge retraction. So yeah, take that for what you will. That's super bearish.
Yeah, it looks dead. It looks super dead to me.
Yeah, let me see. What's the one that's showing up on everybody else's? It just says 0. There's nothing to borrow. Yeah, anyway, super dead. I just want to make that clear that I was joking.
Oh, yeah. I assume everyone knew you were joking, but you never know.
Yeah, I guess it's hard to say because there's a lot of 0 availability, but it kind of looks like it's flatlined, but it hasn't. It's going down.
Yeah, I mean, it hit the same like liquidity levels that it hit in August on $3 of price action. So that doesn't look good to me at all. I mean, I guess there's still potential that like it could continue ramping like up into gamma max as the market maker repositions, but I think the market maker is fine, and I think everyone's sold out of their 0 DTs, which let off like a lot of that pressure.
Yeah, as long as people know that at this point you're just riding the dragon.
Yeah. All right, so what do we want to start with? Do we want to start with Jimmy, Upstart, SPX?
JFresh has got some really good fodder in there in that little thing.
Oh, okay. Where the fuck is it?
Yeah, I made a little folder or a little
thread.
That's the word.
What channel
Love
is
to
it
hear you
in?
talk about this stuff.
It's under
Oh,
general.
I got it.
Yeah.
All right.
So that first chart is a continuation of our discussion that we had last time about the VIX.
Okay. Oh. Let me get these opened up so people can see them.
Carl's calling me a shill. You're a shill, Carl.
He's just jealous because he's not hanging out with me. Don't worry about it. Also, you're all shills. Otherwise, I wouldn't work with you.
Yeah.
I am a shill.
All right. All right. Go nuts.
Do you have it up on your
Yep.
YouTube? I'm not live. Hold on. There it is. Haha. Yeah. So if you look, we talked about this a little bit last week. I had noticed a lot of chatter in the general media about how the VIX and SPX relationship is kind of broken. So I figured I'd try to look at it. So I essentially, through a little bit of magic and a little bit of math and some hocus pocus, try to correlate these two things, trying to remove out longer term trends and just looking at the volatility itself on the year or sub yearly timescale.
Okay.
And notice that in December, when everything dropped, that the VIX kind of stayed flat and everything, equities just all dropped. And so I think what was going on there, beyond just good old selling, was that somebody was going short volatility, short stocks, selling a bunch of calls on the market. And that had sort of sat for a while. And then, as we expected, the price should revert back to the VIX, which it had done this week, which was awesome to see that happen. But the VIX is continuing to drop. And again, this is an inverse VIX. So going up here at the end means that the VIX is dropping. So this disconnect still hasn't been resolved in the near term. So for that reason, I still think that there's more upside,
I agree.
and that although the VIX is going down on the market, the volatility should be going up on individual stocks.
In the
As
in
these
the in the 30-day window.
in this next 30 days.
Well, the IV 30 should be going up on individual equities, right? Yeah.
Yeah.
Okay.
The IV 30, and even next few weeks, kind of deal. So I thought that was interesting that this still hasn't been resolved, and the next chart is kind of a newer chart, but I thought that this was really interesting to kind of see some of the consequences of how puts and calls are being priced right now. So not this chart down here. This chart down here is just some statistical
Oh, okay.
analysis of the above chart.
I assume you
It
mean
just basically shows
this
it's
chart.
statistically still not resolved, this deviation that we've seen. Carl, the reason that I can say hocus pocus and everybody still listens to me is because I have a doctorate.
This is accurate.
Okay. So I've been really interested as the rates climb. The effect of rates on pricing of options becomes much more important, and we've had low rates for so long. I feel like a lot of options traders and analyzers have just sort of completely ignored the rate because it's zero or roughly zero. So what I did was I basically said, what is the rate that the SPX options chain is what rate is the options chain assuming in pricing their calls and puts? So I had to add in the dividend. So I basically pulled the dividend percentage over time, and the 1 month, 3 month, and 1 year treasury bill rates over
Okay.
time, and pulled out the rate for the SPX and generated this plot. And what it shows is that from January until again about December, the rate that the market assumes has sort of oscillated between the 1 month rate and the 1 year rate. And there's really interesting right now, it's actually dropped below all of the current rates quite significantly, like almost a percentage point. And so this is really strange because there's some very low hanging fruit in terms of arbitrage when things like this happen.
Yeah.
So the fact that this is persisting to the degree that it is quite interesting. We'll see how that resolves, but it kind of lends credence to the fact that one of the consequences of this rate being too low is that calls are actually cheap and puts are expensive relative to calls.
Yeah.
And so that sort of lends credence to this theory that I've developed based on the VIX data. I just showed that there's too many short calls out, and when those close, if those close, right? I mean, if Putin, I don't know, does something nuts tomorrow, or
Yeah.
I don't know what could happen, and it drops, then sure, they never have to close those positions. But if the market keeps bleeding up, because we are at positive charm territory where it's just natural buying occurring over time, and those positions have to close, there could be quite some violent. I think this is exactly the situation that we found ourselves in the July timeframe, July through August, where it just kept going up, and everyone was just like, "What is going on here?"
Yeah.
I see a lot of similarities between there now, but now
Even more so.
it's even worse.
Yeah.
So it'll be interesting to see what happens.
I mean,
for those
this is kind of
reasons,
the battle we've been watching go on in the SPX over the last, let's be honest now, almost 6 months. Like, especially since we started, noticing the mispricing of risk back in October, and we were calling for like the melt up, right? Like, that's still continuing. I mean, I think a lot of people are missing the effect of positioning and their focus on the news, right? Remember that the market's decisions are a sum of its participants, right? And um, if the participants are betting that the market's going to go up, or the participants simply can't leverage the market going down, there is still that net accumulation day over day, week over week, month over month of liquidity flowing into the market, capital flowing into the market. So the drive in the market is always up, and if up is cheaper to leverage, people are going to take advantage of that.
Well, it's not only cheaper to leverage, it's literally free. You
Yeah,
literally can make money leveraging the upside right now. Like free money. Literally free money.
yeah. There's a
Um,
lot of arbitrage there.
but yeah, but I think I think it's pretty obvious that the market is more than the sum of its parts, right? I mean, everybody, like you said, people are looking at news. Everybody's eyeing. Now that we're kind of reaching the top of what the Fed's going to do, everybody's eyeing earnings as we expect earnings to slump in the first half of this year, and everybody largely just looks at their own portfolio and doesn't really take into account what other people are positioning, largely because it's just difficult to tease out. But you can
Yeah.
get, as I said to someone the other day, you get enough whispers in certain areas of the market that you can actually start reverse engineering some things. But yeah, I think it's pretty obvious. I mean, the market's not just simply deciding that at the end of July it's 3,700, and then it's in the middle of September it's 43, and then in October we decide it's 3,600 again, right? I mean, that's that there's a market level effect occurring that's greater than the sum of the
Well,
parts.
we know a significant chunk of those sold calls are JPM, right? And they're fixed equity funds. They have three of them. The biggest one, obviously, is the one that we follow the color on, but they have more. And similar fixed equity positions in SPX are probably a very large amount notionally of those sold calls, and we are approaching them rather rapidly. We're approaching the upside of a lot of those colors right now, especially at 4,000 and 4050 and
Yeah, and
4,100.
and I think it's something you can't discount with the other runs. I mean, if you look at the other runs on GME, I mean, you can see it. There's a huge spike in the SPX in March.
Yep.
There's an kind of an unexpected quick spike in May. It was just kind of nuts all the way through June through August or so. And then this last run is sort of in the anomaly where we haven't really seen a whole lot other than the halt up in October. But yeah, so I think there's a lot of positioning on a lot of mid and small cap stocks that are short vol, short stock, aka sold calls that
Yeah.
are really being pressured. I mean, I published daily charts of the time and sales on GME throughout the week. I didn't publish one on Friday. I may still, but Friday was just nothing, right? I mean, it's
Yeah.
just kind of they were buying, they were selling calls at the rate that the calls were being bought all day, and it just kind of did nothing. But throughout the week, I mean, you could see the stock price would rise and get up next to a strike that had a lot of um, call OI, and then you just see a bunch of weeklies being bought for that strike, and then the price just rocket up to the next, below the next strike, and then it drift up, and then they would do it again for that strike, and you could just see these massive sold call positions just very slowly retreating. And so I think that's one of the reasons why we've had this sort of like meander up, and it hasn't just been violent, because
Yeah.
they're still not completely out of control. But if the market puts too much pressure on them, that this entire GME position just becomes a fat tail risk they don't want anymore, it could get explosive. But if the market goes down, I don't think GME necessarily can
I mean, part of that's also them fighting back against the market makers' hedge shifting and working against them. Because
Yeah.
then if the market makers hedge flips, they're in a really tricky situation, and so whenever we approach those levels, they fight back pretty hard. I think that's always almost visible in the options data, where
Oh yeah,
they
you
dip
can
down.
always see, yeah, just like they pull back, if they see an opportunity to punch back down a little bit, they'll still do it. So
Yeah,
they're definitely still in control and trying, I think, at this point, just to preserve profits that they've already accrued.
yeah.
So, but
I,
yeah,
I still
that's
think I still think we're like very close to capitulation of the positions, at least based on what we're looking at. I mean, obviously, we want to see that continuation of liquidity in GME's primary and secondary markets realized, but um, that's been really interesting to follow this week, even day by day.
Yeah, I'll say ever since the 6th, it's just gotten more and more interesting. That Friday was really cool. I think it was the
Yeah,
first I think it was the first big sign that we were onto something with all these deferrals and how they're handled, because it's a big problem in the whole market, right? There's these deferrals going on everywhere. I mean, it's not just that they're taking advantage of it on this. I mean, there's probably some way to profit off taking advantage of it, everywhere.
yeah, I mean, obviously we all got together and started digging into GME, but I think GME is definitely it's not unique in the sense of how these big players are taking advantage of things. Like I think this is just happening across all small and mid cap stocks. Because I mean, if you look at the PE ratio of small and mid cap S&P, they're basically down almost near where we were at the bottom of the 2008 crash. That seems a little extreme to me. I haven't fully process that information, but I came across those charts the other day, and that struck me as odd. So I think they're just selling tons of volatility on those things.
Yeah, absolutely. Well, I mean, if it seems like it's going to be a protracted bear market, I mean, it seems like one of the safest ways to sort of turn a decent profit. But it can lead to, extreme sort of situations that, will end up mean reverting to some degree unless
Oh
things
yeah,
get as bad as they, are like implying that they will be through the PE.
yeah, I agree. I mean, if you think about it, with Kenny's great profits, we know that people going long didn't make money. We know that people going short actually didn't make a whole lot of money because of the volatility and how slow it's progressed. So the only other way they could have made money is volatility plays, right?
Yeah, volatility and, you know, taking advantage of market inefficiencies. I mean, they really kind of show their faces a lot when liquidity in the market goes down, right? And for the past, year now, 2 years almost, liquidity's just been kind of flowing out. Although we've been seeing every once in a while a little sign that someone's still there. I don't know, someone or multiple people, but like, Friday the 6th, there was a ton of risk on across the entire market. Like everything was up and a lot. Like it was, and from bonds to equities to, someone just came in and just started making it rain.
And I'm still not sure how much of that is people buying versus people closing
Yeah, for sure.
bearish
Absolutely.
positions. Which,
Yeah.
yeah,
That's the real question. I mean, there's no real easy way to answer that except for to see what happens next.
yeah, and I mean, I've tried to look at data that shows net flows into things, and um, honestly, mutual funds don't look great right now, but ETFs they're still positive cash flows. I mean, those flows are going down, but they've been positive all year. um, and most of that is institutional. Retail investors have been the primary source of the outflows, which is bullish because they tend to sell the bottom and buy the top. So it'll be interesting to see. I mean, I know we've argued a lot over whether we think the market's going to go up or down next. I think probably flattish volatility for the next 2 months and then up, right? But how far down it's going to go and when is hard to say. But we're definitely getting near the bottom unless something dramatic happens.
Yeah,
Yeah,
I could agree with that. I think
I like that.
the range to the downside is becoming more and more limited as we push up. I still think we have yet to see the effects of collapsing margins and reduced forward guidance, but even at these prices, how far is that going to pull us down? Is that going to pull us down to like 3,500 again? Maybe not,
Yeah, I mean, we already saw this week. I mean, the quarter fours that came out, I think it's something like 6% of the S&P 500 has reported earnings as of
Yeah,
last week.
so far.
And the upward surprise rate has still kind of been in line with previous quarters. So, yes, they've been revising down this whole time, but if you look through 2022, they got it way too low pretty much all year compared to what actually came in. And if that continues to some degree, or at least is in line with it, if we continue to see an upside rate of 60 to 70% surprise, it might not people just might not care.
Yeah, I like that way of thinking about it because it's true. Things have not been so bad, and I think that certainty has sort of kind of started creeping back into the market. It's not like last year it was really uncertain what was happening because we were raising rates super fast, and the market just didn't really know how to price that in. But it sort of figured it out over time, and I think as that happened, like overall volatility just hasn't like spiked as hard as it did last year.
Yeah, I mean, you almost noticed some of that realization of certainty occur this week, as we became very detached from the VIX and like index movements in the early part of the week, and as we moved into the end of the week, VIX and SPX moved right into lockstep and just started moving up, right? And well, VIX down, market up. Yeah, I agree. I think there's a lot of certainty surrounding the PPI print. There's a lot of, well, at least people feel very certain about the Fed decision, that it's going to be like 0.25 and not greater, and yeah, certainty has quite the strong effect on equity pricing.
Yeah. Um, and I mean the cool part about this is, we can bring it all full circle to these heavily shorted stocks. I mean, as returns go up in overall indices, institutions are going to want to diversify those returns, and reduce overall risk or sorry, overall concentration. Um, so that has a net positive effect on just the broader market, in a way. So, if the SPX continues to push up, things continue to look okay, there will be a good deal of pressure on a lot of stocks out there that otherwise wouldn't see any in a time of uncertainty, because institutions are more willing to diversify in a more stable market.
Yep. Something else I wanted to cover, because this is a little bit hotly debated by well, I think we've all talked about it actually. With regards to XRT liquidity as it pertains to GME, I simply don't think they're using XRT very much. So this is with IJK, which, remember, the two heaviest weighted ETFs in GME right now are IJH and IJK. IJK like 1.7 million shares, IJH like 7.8 million shares. XRT, you know, still like floating around like the 180,000 level or something like that. And while it's heavily abused, it doesn't provide a lot of intraday liquidity, right? Because of that. And, you know, obviously IJK being used significantly more and also realizing significantly more improvement to its liquidity over the course of this last week. And I know JFresh was concerned that like we'd seen some XRT covering. I don't think that's the case. I think XRT is just kind of dormant. They're not using it very much. I'm not sure why. It could be because it hasn't rebalanced yet. There could be a number of reasons, right? But like, I don't think we're seeing a lot of action out of XRT at all.
I think it's probably because of the arbitrage. I mean, you know, Turd's chart of arbitrage really. I mean, that would explain why you wouldn't use it for much creation and redemption because there's not much risk-free profitability on it. You know.
Yeah. And that ended on November 18th, and it hasn't picked back up, which is also really interesting.
Yeah,
Yeah.
the thing that just got me thinking about that was so here's my train of thought. It was that the day before Friday, we sort of that's where I saw, you know, that's where we saw a lot of a fair amount of price improvement from like 19 to, did we hit 20? Did we touch 21, or maybe we're just below it? But that was the day where I just kind of saw this steady uptrend of buying, and then seeing, you know, someone who had short calls just pulling away strike by strike as it just kind of marched up.
Mm-hmm.
And so, and then the next day it just was kind of flat. And then if you look at like the big dips that were occurring that day on GME, you know, we had a couple of roller coaster nail biters from 21 down to 20, and then from 2070 down to 2016. Those actually correlate to dips that occurred on XRT, which
Well, they
would
also
suggest,
correlate to dips that occurred on SPX, right? So,
no, not
and
really.
IWM.
Maybe I just wasn't. Uh, I don't know. Well,
I mean, they were. I remember, especially Friday. I remember both of them, and they were both like in lockstep with the declining market and like shorting into active funds selling. Right. I don't know. To me, it looked like, at least from where I was watching, it looked like realization, like of liquidity, like some covering, and then using the covered shares to short immediately after. Which still feels a lot like price stabilization and just dragging this out more than it does feel like any actual covering event.
yeah. So the one I'm referring to happened at 1 o'clock on GME. That's where it dropped from 21 to about 20, 20 and change, really rapidly. And if you look at XRT right at 1 o'clock, it goes pretty quickly down from 66 down to 65.50, and then recovers. If you look at this SPX at 1 o'clock, I mean, yeah, there's a little bit of down on it, but it's choppy and definitely not as violent. I don't know what, I might be overreading it, sure. It just struck me as odd that they.
There's a pretty big drop around like 115.
So what's
But they
more
seem to
interesting to
short.
me.
They seem to short when market either stabilizes on low volume or drops. Like those are their favorite
Oh yeah,
times to short, when
yeah.
like active fund pressure is either non-existent because there's no volume, or it's to the downside.
Or there's a fat block order about to come in.
If
I
IJK
mean,
liquidity is increasing, could they use that to stop or run? No, not really. That's I mean, if a run happens, these all of this stuff blows up.
Okay, so IJH had a pretty massive drop at that time as well.
Okay.
And then you said IJK.
Yeah. Do we return to a bull market this year with the current political climate and potential earnings missing on the table? If institutions want to keep pushing the market up, It's no more than just a trap their overall sentiment and dumping their equity at the top, right? Yeah, basically. I mean, longs are eventually going to just take profits because the future potential of the things they own is worth less, right? So I don't think we're going to see a return to a bull market this year. But maybe we start at the end of the year, like moving into quarter 3, quarter 4, as the Fed really tries to affect its soft landing, and we start to see a pullback. I think the key point for a return to a bull market is when we start to see a pullback in the overnight RRP rates, and the Fed starts to push that liquidity back out into the equity markets. Now, when they do that, that'll really force a turnaround. That could happen sooner rather than later, but it's more likely that we see it later.
Yeah, so I guess just to sort of summarize my feelings on the ETFs and GME, that flat day that lacked momentum, buying could still occur next week, and that would be great to see. But I do remain a little bit more cautious.
Yeah, I'm feeling very cautious. I will tell you the one thing that I like a lot. We're not returning to like God, I don't want to say spot anymore, but it's spot. We're not returning to the prices that call options are being bought at, right?
Yeah, no, I mean I agree. We're bleeding up, which doesn't happen very often on
Yeah.
on GME.
Generally, any liquidity event on GME that occurs, even the smaller ones, like we see here, right? These will return to the starting price. But over the last 5 days, we have not seen a return to where this all started, and that's extremely encouraging, especially the persistence of it.
Yeah, no, I agree.
I do think we're getting like a slow realization of liquidity. The question is, and I think especially for me and Dork, digging into like all this liquidity shit is like, at what point does it break? And that ties into the options positioning, right? And if it does break, what occurs, or like, because now I think we're finally in the position where not only we can see the pressure building up, but we can actually see how they react to it breaking and how they position on their end. And I can't wait to like dig into the time and sales that come out when we get an actual realization of volume.
So yeah, I'm excited.
And
Yeah, I mean they're definitely, and I'm not even sure it's the same people, right? I mean you have the short balls who are selling calls, and now those are getting pushed on. And then you have the shorts who have not given up 1 inch this entire time.
I think we have a lot more long shorts on GME now than we did in like May and March.
Oh yeah, I think they've been just bleeding in, but
Yeah.
they are just, they're determined, right? I
I
mean
mean,
they are
you could even
emboldened.
see it like in the chat, right? Like the confidence in the downside. Other participants, ones with more money, are gonna feel that way too, right? Like Jimmy's dead, right? And they can short it,
Yeah,
and that overconfidence is, I think, a mistake that happens frequently against these vol short positions. And
yeah. That's how you get buffs.
yeah.
uh, yeah, I agree. I mean they haven't given up anything, and I hope we get them sweating. It'll help a lot if the market goes up. I think largely the fate of GME rests more on, because these people are so large, rests more on their market wide positioning than anything else. I mean, if anything, we just want them to say GME's not worth picking on right now, and just let it fly.
Yeah, I mean, so in the fodder, I just put like a 2x2 chart of the 4 ETFs. It's just like SPY, QQQ, XRT, and IWM.
Okay.
From Friday before last, January 6th onward, kind of marked on there, and it kind of shows sort of what's been happening uh, in terms of repricing.
Yeah.
And so there's a lot of momentum ever since after Friday on IWM, which I found really interesting, right?
Mm-hmm.
So, people who have been historically short these smaller companies thinking that they're more exposed to a recession or something like that. I don't know. People who are short small cap companies are definitely kind of bummed, although in the news they've been talking about going long it for about a month now.
Yeah.
So if you were short, small caps, you're feeling pretty bad. I mean, if you shorted SPY, you're probably doing okay. If you did it at that resistance, we're still there. They're not necessarily blown up yet.
Yeah.
But it seems like the pressure, especially with JFresh's data, it seems like the upside pressure is really there, and in a way that it wasn't, at the end of last year. So I'm pretty stoked. The all the stuff looks good. I mean, I just did like the whatever liquidity index on GME because I haven't looked at it in a while, but I wanted to see what it looked like. And
What was really interesting about going into the December rate decision actually was, we had a similar setup. We had similar momentum. I will say that this time it does look a little stronger. Like August was very weak, right? We all know it just kind of like ground. It didn't make any sense. And then in December, it was the move up was, starting to get a lot of steam. And then we were going to that rate decision, futures sellers were just very, very unrelenting in their desire not to price higher, right? And I think that's really where we hit the wall, and we saw that rejection on the last like bear rally, right? And that led to our current pullback. But I think this time we have even more momentum than we had in August and December, and I think in futures we're likely to see a little more easing as far as their willingness to continue pricing higher.
yeah, I feel like at some point this is going to top out.
Like at
But
4100 on SPX before, ES just locked up. Like no, there was a brick wall, and this time I'm seeing, resistances on ES give up much more easily. Uh, the accumulation of buyers just driving up one resistance after the next, and it's really
Well,
showing a lot
yeah.
more confidence in long positions to move into higher price ranges.
Well, the shorts have had a whole month to reposition, right?
But they haven't, right? That's what's killing me
Well,
is like they're
the market
so,
makers, I think, have, but the
yeah,
shorts, they have.
they've
I,
just been fucked since October. And like I know a lot of people
here-
like to be like, oh, they have infinite money, but they've just been underwater. They had billions and billions, almost trillions of dollars invested in seeing the downside of a crash and going into like October, mid-October, and it all just got burned up. I mean, there was so much leverage then. There was leverage at, 3,300, 3,400, 3,200, 3,000, 2,900, just shitloads of OI.
God,
And it
so
all
greedy.
just got destroyed. And they've been playing catch up ever since, but they can't get any foothold because, like we said, the pricing on puts is exorbitant and calls are free. Not just cheap, like actually, with the arbitrage, especially with what you're showing. I mean, there's no cost to go long, so it's really, even though bulls are still skittish and scared of macro events, their positioning isn't costing them anything, whereas the puts, they really need to pump a lot of money into leverage to turn this train around. If you've been noticing the news about new variant happening in China, which resulted in a massive 80+% infection, high death rate, something to be cautious about, what could potentially be a new spread out variant similar to early 2020 in the near future? Possibly. I thought we were instating testing on any foreign travelers, but maybe I'm wrong on that. Um, It's interesting.
I don't
Yeah, I
know.
mean that could severely impact China opening back up, provided the infection rate's really high.
Yeah, I
Which
think it,
could, but that could be bullish. China opening up is not necessarily the greatest thing. You know, it can spike inflation, it can spike demand, it can lead to another smaller supply shock. And you know, the world's been kind of doing fine without China for about, you know, a year now, almost 8 months at least. And China re-entering the market is probably more bearish than it is bullish. So suppressing China's entry to the market, or re-entry into the, you know, global economic stage could be a positive, actually.
yeah,
Yeah,
and
I'm. Oh, go ahead.
I was gonna say, I think they were almost implying a certain global risk too from this new variant. But the science behind, the vaccines that are developed in America with mRNA are flexible enough that we could probably, get a culture of it and develop a vaccine that, prevents it relatively quickly, like within like a couple months, which is, I mean, that's actually like lightning speed, but that's just kind of how fast those things go. And that's why they've been coming out with so many boosters, right? Is because they can.
Yeah. Yeah, the mRNA stuff is really, really fast. It's impressive.
It's crazy, dude. It's just, and the amount of med tech advancement that happened from the pandemic. I remember about a month before America locked down, like in February, I was at the last show I would go to for over a year. Um, and it was one of my favorite artists. And I was in the bathroom, and I was like, this one dude was washing his hands. He was like, "How about that COVID, huh?" And I was like, "Yeah, it's pretty crazy. It's gonna get here." And he's like, "Yeah, it's already here." He's like, "But the amount of advancements in med tech that are about to come are gonna blow your mind." And he was absolutely right. Like the mRNA stuff was truly revolutionary in
Random
medicine.
bathroom guy for the win. You should have gone long fucking Moderna and Pfizer when he told you that.
Oh, I know, but I was
You never
I was
ignore a bathroom profit.
my state of mind was pretty altered, and
Yeah,
I just
I
sold
was just
everything.
imagining just you standing in a bathroom with another man and just silently both of you staring at the ceiling, not talking, and you're just imagining all of this in your head.
No, we were washing our hands. There were no doors out, but yeah, but I just sold everything and waited, and then I
Dork,
just
next
bought
time
really
next
quick.
time you go on a spirit journey and hear anything about macroeconomic events, feel free to fill me in.
Yeah, I mean, I'm certainly not an expert on, public health and spread of disease, but my understanding is I mean, we're always going to see new variants, just like the flu and the common cold. And typically, viruses don't necessarily do the best if they kill too many of their hosts.
Yeah,
So
it's
over
like
time, as they evolve, they get more infectious and less deadly. So I'm intrigued by you saying that it is spreading rapidly and deadly. I'm not surprised that it's spreading rapidly. That's kind of what they
I
do.
think you're
But
talking, well, there's caveats to that, and like I have a little bit of a bio background. Not nearly enough to make me an expert on any of this, but the successful strains will be less deadly and more infectious, but you can also get strains that are more deadly and less infectious, or very infectious and more deadly. That could all, like, they won't be as successful as a less deadly strain, but they could still be like there, right? So like all of the strains will be like, over time, will become eventually less deadly and more infective, right? Or like higher, like a higher rate of infection, because that's, you know, best for propagating the continuation of the virus. Because if you kill your host, it's, you know, evolutionarily, you know, you failed at your job. um but yeah, you can still get strains that are more deadly and also very infectious, and that's bad, right?
oh yeah, but
Well,
yeah, I mean, I'll be worried if it. I'm not worried yet. I feel like we
yeah.
hear this every 3 months. Who
What's
cares?
Yeah.
unique about China too is that they were locked down for a very long time. So not only that, but their vaccines are less effective.
Yes.
So
Yeah.
it's a bit of a double-edged sword there with reopening, because you have a population that has a less effective vaccine that also has not had very much natural exposure to the virus. So the overall herd immunity is not very robust. So when a new variant comes out, it's going to be more infectious, and with less effective vaccines that may not cover as many strains, or more novel strains. It's a high risk situation, and it's going to be interesting to see how it evolves there. But I don't necessarily think the effects are going to be felt elsewhere.
Yeah,
Yeah,
we'll see what happens. But I agree. It's probably nothing to worry about in the near term.
and
Sure.
I will say, if anything, the pandemic has given me renewed hope in our positioning against China. Because China's advantage is everybody has to listen to one person, right? So organizationally and logistically, they could out logistic us, right? And they had been doing so, at least in the manufacturing sector, for decades. Our primary strength is innovators don't like to be told what to do. So they tend to want to live here and not there.
Yeah.
And so when you have something like the pandemic, it's no surprise to me that the Western world comes up with a much better solution much faster, because all the people that are doers, that are going to actually make things and change the world, don't like to be told what to do.
Yeah, I mean, you saw that with, like Nazi Germany, right? The scientists wanted out, um, and eventually got out and were protected regardless of what they did. But I think that's a common thematic element with, like, overreaching governments everywhere. Is it creates a brain drain. Um,
I just don't get it. Like,
I also
China's
I also know a lot of people who work with, like, DARPA and stuff, and that, yeah, the development of Chinese technology is generally way behind ours. They're very good at developing things fast and forcing focus onto stuff, but
they're good at throwing a lot of resources at something, but not
yeah,
necessarily coming up with something that's truly creative and innovative.
yeah,
But they could brute force more, sort of less extreme problems, but potentially better than we can in the short term. But that's not a huge deal so far. But yeah, I mean, I don't understand what the Russia. I mean, China's screwed. They've shut down for so long that I don't know what they're gonna do.
I mean,
And then,
economically, if we continue to reshore industry, they've put themselves 10 plus years behind again.
oh yeah, the reshoring is happening. I can
Yeah,
tell you that right now. I have firsthand experience. I mean, it is not only happening; it is popular and almost presumed in a lot of places where the narrative was just 10 years ago. It will never be made here again. It's too cheap to do it in China.
yeah,
So I mean, that's incredibly. I mean, we have all this. All of a sudden, we're the biggest producer of oil. Now we're starting to manufacture again. Um, we're in a pretty good spot. I like how the government is managing some of their uh, their bets, on chips and things like that. So
yeah. I think people kind of glanced over uh Biden's like push to pull back high end chips from China, but I don't think they understand, like, it's like economic war at a very high level, and can seriously hamper China's ability to expand their economy for the next, well, for quite some time. And China immediately comes out with a bunch of press about how they've matched those high end chips on their own, but I don't think so.
they no,
And
they
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 don't have
simply don't
the
have
manufacturing capabilities for it either.
they don't
Which
have the.
does
I mean,
raise the
so
threat level on Taiwan, but
yeah, but from these micro and nano fab facilities, they are extremely complex, and there's also a lot. You know, people like think like, oh, maybe it's an engineering marvel. There's actually, they call it, these production rules or production steps for these chips. They call them recipes for a reason. It's a little bit like cooking, so there's a little bit of an art to it. And a lot of that is institutional knowledge and comes from a very deep understanding of a lot of different fields of physics. And China's not good at that. China's good at implementing something you tell them to implement and doing it quickly and cheaply. But if you ask them to innovate, they're going to struggle. And so, yeah, I don't believe them.
Yeah, and also like just because they're making like a 5 nm chip, right? Like how much of the batch is actually a successful chip, right? You know,
I
like
mean, that's the whole
yeah,
game. Yeah.
like they Intel and AMD and like the Taiwanese manufacturers might be producing viable chips at like 30 or 40% of the batch, and China's producing like 1%. It's just not they're not going to catch up in a meaningful way for quite some time.
Yeah, it's too easy to get it wrong. These recipes are extremely unstable and very finicky. And yeah, there's a lot of just institutional knowledge hidden under the surface of how do you get those margins on the chips. Because I mean, I think most people know nowadays the only difference, like your Intel i7, i5, i3, they're all the same chip made on the same production line.
Yeah.
They just they just sort them based on what fraction of the transistors came out.
In the industry, it's called binning.
Yeah. Anyway, now we're pretty far off topic, but yeah.
Yeah, we managed to pull it off and stop talking about what we intended to,
Yeah,
and
but
also drag the conversation out an extra 20 minutes.
Yeah, so I think we don't care about China.
Yeah,
And
I
I mean,
think so.
Everybody else that relies on China is fucked too. Like, I don't understand why Russia's in a war right now. It doesn't make any sense.
Well, there's I think there's more
I mean,
ego involved there than just pure strategy, right? Like there's strategy involved. I think initially this is super tinfoil hat, but from what I understand of Putin and his political strategy to date, there was an incentive for him to trigger an event that would cause the oligarch class to lose a significant amount of their power in Russia, which he successfully did. Right, he's neutered them. They've lost all their assets, and the ones that haven't fled have lost everything. Right, which puts him in a much stronger position of power. I don't think he really cares about shuffling off his excess munitions inventories. I don't think it hurts him that much, and he still has buyers for oil, so the economy can remain fairly stable for some time. But eventually it has to end, and that's tricky because how does he end it and maintain the narrative, right?
so I mean, we kind of just have free reign to keep on just being awesome.
Yeah, I mean, both major superpowers outside of the U.S. have put themselves dramatically on the back foot, and then in turn, the fourth superpower, I guess, which you would consider like the EU, has been largely affected by the decisions of one of the other superpowers, and so it just puts America in this just. I mean, I wouldn't be surprised if we see like another economic golden age over the next 20 to 25 years, climate change providing, but yeah, I mean, America's very well positioned to take a very strong position at the forefront of the world economy, more so than they have been since like maybe like the late 70s, early 80s.
Yeah, I think the biggest challenges going forward will just be, will we craft policy to capture that, or will we, work against ourselves? It'll be
Yeah, the
interesting.
infighting in our political system right now is not advantageous to
Ugh,
us.
it's gotten so bad. I can't
Yeah.
even look at it anymore.
Yeah, me either. I mean, I hate it. I've never been a big fan of any of our political system, but
It's getting worse.
yeah.
But I do think a lot of people are checking out. I've had much fewer random conversations about politics with people. I think everyone's just over it. So
That's
hopefully,
probably a good thing, honestly.
yeah,
It's
I think
gonna,
so. So I'm hoping
because
that
it'll
will
bring
moderate.
things, yeah, it'll bring things back to center where America historically is most successful.
Yeah, I just want to make some money.
Yep.
Yeah, I like my dollars. I want to keep using them, please.
All right, did everybody hear that? We got Dork on record. He likes the dollar.
So yeah, I think, and you guys can correct me if you disagree on this, but I think in the near term, as far as like these stocks are concerned, GME and Upstart specifically, I think the potential to realize volume and volatility is there. I think the market drag will have some effect on that, but I don't think we're in a position yet to say it's either over or not going to happen. So be cautious, hedge your bets, or buy into very stable positions that afford you plenty of time. And then if you're going to play anything in the near term, be a little aggressive with profit taking, and don't be so fearful of missing out. You guys want to add anything to that?
I mean, I'll just say I definitely did some pulling back on Friday near the end of the day. Somewhat just because of the long weekend, but yeah, I'd like to see a little bit more confirmation from the market before I just start going balls deep in one direction or the other.
Yeah, I definitely on Friday I because that was kind of my day. Just I was like thinking to myself, okay, Friday's kind of for me. I had like delta exposed positions because I expected the price to go up at first, but not IV, and it worked. But by Friday, I was like, okay, these things are febs. They're gonna lose a little bit of theta, and I just kind of don't want to lose that theta. So I went to like some super far out of the money jams and just put my profits into that. And that way, there's only really like I think 20% risk to the downside on my profits, or just on my whole position. So that I'm fine with that.
Yeah, remember, like we've realized a little bit of delta, but we have not realized any significant change in volatility. And if a significant change in volatility comes, that's something to plan around at least.
Yeah, yeah, and it's luckily volatility positions are fairly low risk on GME at this point because it's
Yeah, well,
already
you're not
so low.
exposed to the near-term price movements, especially if you have a sufficient amount of theta. If you're buying calls with like delta of like 0.1, 0.05 or less, your exposure to it being at $20 or $15 is almost irrelevant. I don't know anything about DFE's brother. I saw he posted the thing. That's cool. I started talking about him, and
Yeah, he posted a picture of himself. People
yeah,
do that on the internet. I don't
that's
know.
pretty common, I think.
Yeah, I don't know why we do that.
Yeah,
Most of the time.
I think the name of the game, the thing to hope for this week and for the next few weeks is that earnings just don't shit the bed. As long as they don't completely shit the bed, we've got a shot at some real upside everywhere.
Yeah, I agree.
Yeah, I mean, OPEX is still a thing, and calls have moved into the money. I mean, that's still happening. Like that's
I don't think
great
we
for
have any
OPEX.
big earnings this week either, right? Like nothing huge.
Uh, I don't think so. Maybe one or two.
There were some more financial ones that looked like they were going to come in kind of bad.
Yeah. Luckily, they've revised down hard enough that
Yeah,
everything will
I
be.
think we're still looking at like financial stuff. All right, I'm gonna close this up, and I've got stuff to do, and someone's at my door. So, um, you guys have a good one. Thank you guys all for tuning in. If you have any questions, DM me over on the Discord if I didn't get to it. And Pickles Picks will be out tomorrow night, probably around like 11 or 12 ish. Thank you guys so much. Have a good one. Later, JFresh, Dork, thank you guys for coming on and talking. I appreciate it as
Always fun.
always.
Let's go make some memes.
Yep.
Yeah. Happy Martin Luther King Jr. Day, everybody.
Yeah.
Yep. Happy Martin Luther King Jr. Day, man. I'll see you guys later. Enjoy the extra day off. All right. Bye, guys. Thank you so much.